everybody, this is Paul Cooper with Totes and Notes. It's September 18th, and we're finally getting around to doing another market meltdown. And what are we going to start with? My favorite guy, Elon Musk. So grab your popcorn, because he's been busy and he hasn't been disappointing with his shenanigans. So the British expat that was a cave diver for the Thai soccer team a few months back, well, Elon Musk called him a pedophile, basically, and it was just weird and bizarre, and he finally took it back. But that guy is suing him now, and yeah, it looks really good, Elon. You know, you're a billionaire that is now belittling and bullying other people that are, by all accounts, good people and heroes, just because they didn't like your ideas. Yeah, Elon is, poor guy, he's losing it. So now that here, we'll run over this. So Tesla has also been investigated by the Department of Justice over Elon's statements a while back of potentially going private. They are now confirming that they are fully cooperating with the Department of Justice, so we'll have to see how this goes. And yeah, so hopefully now that will wrap up our Elon watch for this week's market meltdown. You know, the guy has great ideas as far as when it comes to technology and things like that, but he's been unraveling, and I wish him the best, but he needs to be quiet for a while. So now we're moving on to silver's collapse to 10-year lows, or 10-year lows, is seeing the U.S. Mint sell out of Silver Eagle coins. Sorry, folks, I can't talk right now. Let me drink some tea here. So Goldcore here, obviously they buy and sell gold, so they want you to come and buy their stuff. So this is slightly, what's a good word for it? I wouldn't say it's necessarily fake news, but they definitely have a lean towards wanting you to come and buy and sell gold and silver from them. And silver is undervalued right now. It's been going down. It is at lows. $14 an ounce, real cheap. So if you are bullish on precious metals and miners like I am and I was, now may be the time to buy it. That being said, if you have any amount of money, you know, buying actual silver or ounces of silver and gold isn't really that great of an investment. It's kind of an end of the world investment, because if you have physical possession of it, now you've got to store it, you got to keep it safe. If you buy silver, it's $14 an ounce, so if you have, you know, thousands of dollars to invest, it ends up taking up a lot of space. If you buy gold, obviously, you can invest a lot more money into gold and have it take up less space. But it's not very liquid. If you go to sell it at an actual dealer, you're not even going to come close to getting spot price. You're going to get jacked on that. So it's kind of one of those things when people tell you to buy gold and silver, they're doing it because the idea is you're going to protect yourself from a financial meltdown and get your money out of the bank into a secure source. The problem is if you need to get that out of gold and silver back into money, it takes a while. It's not as liquid, and you're not going to get all your money out. So as a long-term storage of wealth, it's probably not bad. But if you want to make money off of it, I would highly suggest you do something more liquid than the actual physical metal. All right, for our next article, we're talking about the hottest neighborhoods for millennial transplants. The past few years, we've seen they call it peak millennial, where the number of young people from the millennial generation moving into trendy downtown areas has slowly peaked. It's kind of a demographic thing, so we've talked about it in the past. People from my generation generally aren't making that much money, and they have a lot of student loan debt and other debt that they're trying to carry, so it's preventing them from having families and buying homes. So a lot of them are just trying to live kind of the single lifestyle, the trendy lifestyle downtown, and it's causing the demographic to change. And here are the top kind of cities and downtown areas. You know, LA's a big one, Manhattan's a big one, not really surprising. Philly, Vegas, San Francisco, all these trendy areas where people are moving to because it allows them to live the lifestyle they want. And the big thing is that it's super expensive. They don't have money for homes or family, and they really don't have money for this lifestyle, so a lot of them are using the debt that they've acquired through student loans to pay for this lifestyle, which is just burying them deeper in a hole. People are going to have a really hard time getting out, and it's kind of sad too, because a lot of them are doing this to kind of shield themselves and be in denial, put their head in the sand about their financial situations. They think that, oh, you just go on living this way forever, at least having some fun because you're hanging out with everybody all the time. But it's not sustainable, and it'll be coming to head here eventually. The student loan crisis and bubble is just massive, and it's the one debt you can't get rid of with bankruptcy. So it's going to be really interesting to see how my generation has to deal with this in the coming years. All right, our final article from Zero Hedge is 10 years after Lehman, the solution was more Lehmans. It talks about the Lehman Brothers meltdown and collapse, and how Fannie and Freddie were bailed out shortly before them, and then Lehman was allowed to collapse, even though Freddie and Fannie obviously originated a lot more subprime loans. It's just they were backed by the government. And so they let Lehman Brothers collapse. It talks about what happened then, how we now have a lot. It allowed certain banks to reshuffle and reorganize, and that was supposed to be good and to help things, but really it's just created more issues. So now instead of one Lehman Brothers, we potentially have 10 or more. And we've talked about it in the past few episodes about how it's not subprime anymore, it's non-prime, or other cute sayings as the new subprime. Oh, we don't do subprime, it's just non-prime. Well, what's non-prime? Well, it's 3% down, you don't have to prove, what you make. If you do have any type of money coming in, we'll lend you, 10 to 20 times your annual income. So it's the same garbage, just with a different name and with different companies that have different names, but they're owned by a lot of them are owned by the people that started the first financial crisis. And so this just talks about it, and it talks about what happened to Lehman Brothers and how that affected the rest of the market. And kind of the new paradigm is very parallel to the old one. But that's it for Zero Hedge, so let's head on over to Housing Wire. All right, folks, for our first article on Housing Wire, it's talking about the HUD Secretary Ben Carson lays out his plans for affordable housing and regulatory reform. So his main three ideas is eliminating policy that that increases rent as income goes up. So the theory here is if people are paying an affordable rent at their current rate, and then they make more money, then they'll be able to keep more of that money, and so the rent will be stagnant. The second is to allow public housing authorities the freedom to implement any of the choice rent structures for their properties. And the third is to use HUD funds to provide families in public housing with programs and resources that help break the poverty cycle. So in theory, it all sounds nice, but again, it's based in theory, not reality. So you're going to eliminate policies that increase rent as income goes up. Well, the problem is with supply and demand, there's only so many places to stay, so if there's a bunch of demand for it, then prices have got to go up. Otherwise, there's just never going to be any supply. So again, that's for public housing, so they can kind of do their own thing. Same with the freedom to implement different rent structures for their properties. Rent structures, they just need to charge, if they can help provide people with safe, clean, affordable housing, then that's good. But they're going to implement all these different rent structures, try to control stuff. This person that makes this much will pay this amount. It's complex, and I don't think it's going to work very well. And then the last one is to put programs to help break the poverty cycle. That's all good and everything, but the war on poverty was started in the 60s or 70s, and every time the government's declared a war on something, it's only made it worse. The war on drugs has made it worse. The war on poverty has increased poverty. So clearly our government doesn't have a very good track record. I truly hope these programs work and everything, but honestly, it just sounds like this guy's doing the talking points to make him sound good, and so he can have his nice government job. Now here is the article on Housing Wire that I'm really excited about. Fannie Mae selling billions in reperforming loans to Goldman Sachs. Hello, beautiful. So I'm not going to see this stuff anytime soon, but in a couple years, that's probably when I'm going to be buying a lot of this. We've talked about it a bunch. Our economy has been propped up. We're obviously in a bubble. We're probably due for a very large pullback in both the stock market and housing and just the general economy. So we've got Fannie Mae selling billions in reperforming. So reperforming, that means it was not performing at some point. So why wasn't it performing? It's $2 billion worth. Why was it not performing? Probably because it was the new subprime or the non-prime garbage that they've been writing, and then they finally got it reperforming, and by reperforming, it's probably not the 9 to 12 months that an investor would like. They probably got it performing for 90 days, and now they're selling it to Goldman Sachs, and Goldman Sachs is probably getting it for a pretty good price. And then what they'll do is, just like they did last time, the stuff will go to garbage. They'll get the government to bail them out. They'll sell it off and break it off into smaller tranches. And then eventually it'll trickle down to smaller investors like myself. So this is what I'm excited about. This is long term for me, as in a few years. But this is coming, folks. The wave of just garbage mortgages will be coming back to us in the next anywhere from 6 months to 2.5 years, probably. Probably more likely a year and a half, 2 years. But this is very interesting. It's exciting to me because this is what I invest in, but it is a bit dry. But if you're interested in it, definitely read this article, and I'm sure we'll be talking about this a lot in the months to come. All right, our next article comes from DS News, and it's saying strong economy, strong housing market. It's short, but it's a bit dry, so I'll just try to give you the high points in my opinion of it. They're trying to say that the housing market's doing well in its third quarter, forecast 3.2% annualized despite and here's the key stuff for me, despite slowdowns in consumer spending and business investment and fixed growth. So if you read this and you read between the lines, it basically tells you that the economy isn't that strong, but they're trying to make you believe it is, and they're trying to say that the housing market is better than it really is. We've talked about in the past the housing market's cooling. It's been slowing down, which is a very large segment of the economy. So the economy as a whole is probably going to be slowing down and cooling. So this was a really bizarre article to me because I'm not sure what their motivation is to try to sell us on a strong economy and strong housing market, but then also list things that make you question if that's really what they're saying is true. So that was a little weird. This last article, very dry. It's Fannie Mae reduces the risk pool, and it's just talking about how they shuffle money around, use insurance and other things like that to technically lower their risk. Pretty boring stuff, and honestly, I this is my wheelhouse, and I found it incredibly boring. So I think we're going to end it there. Not much of a high note for this week. I appreciate everyone's patience as far as me delaying videos getting out. I'll try to keep them up on a regular basis, but we've just been super busy. If you have any questions or anything, don't hesitate to reach out to me, and I hope you all have a good day.